fundamental undersupply of rental stock is going to continue to support rents going forward. We saw some pretty significant growth in rents. So if you look at Manchester, we saw 22% annual growth.
Hello to all of our listeners and welcome to the Investment Insights podcast with Select Property. I'm Amber Furr and I'm really excited to be kicking off the second season of the podcast with JLL's Director of Residential, Marcus Dixon. So welcome, Marcus.
Thanks, Amber. Thanks for having me.
So we've got a lot to discuss over the next 20 minutes. And just for those listening, we're going to be discussing the current UK property market. And we're going to be looking into JLL's recently published Big Six residential report, which looks at market activity, rental growth and house price growth across 6 cities in the UK outside of London. But before we get into that report, I just wanted to set the scene because the last 3 years post-pandemic haven't been typical, have they, of the UK property market? So I'm going to start with a stat that Halifax recently published, and that is that over the last 3 years, house prices have risen by over 20%, compared with just 7.8% over the 3 years previous. So can you start off by just talking about the key drivers for that steep house price growth post-pandemic, and also why UK cities have seen the lion's share of that growth?
Yeah, of course. I mean, it's a big topic and one I'm talking about a lot at the moment. But I think, firstly, just rewind back to sort of April, May 2020. If I was sitting here doing a similar podcast and told you that in 3 years' time we'd be looking at prices 20% higher than they were then, I don't think anyone would have believed me.
No.
It's been a really sort of unusual market over the last 3 years. What we saw at the beginning was people leaving cities. The reasons why you live in a city, all of the theatres, the bars, the restaurants, the buzz, the life, and work, importantly, were no longer there. So actually we saw a lot of people moving out. And we saw growth in markets outside of sort of urban areas. But quite quickly, as sort of lockdowns ended, we started to see people come back. And actually, they wanted to live right in the heart of the city. And so we started to see house prices rise quite significantly in certain markets across our big six. So we look at 6 city markets across the UK outside London. They started to grow at different rates, but we saw demand for those properties, both on the rental side and the sales side, start to increase, particularly as some of those restrictions started to lift. And more recently, as students have started to return as well, particularly students from overseas, that demand has only increased. So we've started to see more people wanting to come back to the city. That demand has really pushed prices both on the sales and on the rental side. And we're now starting to see that real buzz returning to a lot of our UK cities.
Okay, great. So I actually moved to Manchester city centre in 2021. Quite bad timing, really, and quite, not the best time to be sort of paying city centre rent when, like you say, offices were closed, theatres, pubs, restaurants were closed. I think Manchester was actually in lockdown for the longest of all UK cities. But you're right, we've seen such a kind of return to city life and such a buzz about the city. So many amazing things that are opening everywhere at the moment, it seems, in Manchester. Okay, so let's talk more about this city centre renaissance. So the Big Six residential report compares market activity, rental growth and house price growth across 6 UK cities outside of London. So what UK cities are there?
So we look at Bristol, Birmingham, Manchester, Leeds, Edinburgh and Glasgow. So we compare what's happening in the new homes market in all of those 6 cities. So essentially what we do is we ask our local JLL offices in those locations to value the price of a 1, 2 and 3 bedroom flat, new build flat and prime new build flat within those cities at that particular point in time. So it gives us an idea of what's happening with values, and particularly on the prime side, what's happening at that top end of the market in terms of price growth and what's happening to rents.
Okay, so in the most recent one then, which looked at all of those things in the year to December 2022, all 6 cities saw growth, didn't they, across house prices and rents. Now, is the key reason for that just this supply and demand imbalance in city centres due to this city centre renaissance that you talk about? And are there other key factors that are contributing to that, particularly rental growth?
Yeah, I mean, I think that 2022 was, I guess, a year of two halves in terms of looking at the market, particularly on the sales side, but that had a knock-on effect to rents too. And so if you look at sort of the first half of the year, we still had relatively low interest rates, so mortgage rates were lower. We still had schemes in place like Help to Buy, which came to an end at the end of October. So we were seeing, particularly in the first half of the year, pretty high levels of growth in prices. A lot to do with the fact that we were seeing strong domestic demand alongside that sort of overseas investor demand that we continue to see. In the second half of the year, following things like the mini budget, we started to see the base rate, the Bank of England base rate rise, which had obviously a knock-on effect for interest rates. And so what we saw, particularly in the second half, was households who maybe would have considered moving over into owner occupation, so sort of first-time buyers who were maybe in rental properties in the city, moving across, but those tenants stayed as tenants rather than became buyers. So we saw this sort of level of demand continuing to increase in the second half of the year, against a pretty static and supply constrained rental market. So we saw some pretty significant growth in rents. So if you look at the two best performing cities, so Manchester and Birmingham, Manchester, we saw 22% annual growth in rents for good quality new city centre stock, and Birmingham around 18%. Across all of our six, rental growth is pretty strong, so just shy of 16%. So really strong growth. In terms of prices, not quite as strong, particularly for, some of the things we've discussed in the second half of the year. But even if we look at Manchester City Centre, we're looking at growth compared with pre-pandemic of around 20%. About 5 or 6% of that came in the last 12 months. So, still some strong growth, but it's the rental market where we've really seen those rents start to accelerate.
Okay, and despite the kind of news headlines about, obviously rising inflation rates and the cost of living going up in the UK, we have seen in the report that there's actually higher demand for this prime new city centre stock, haven't we? Which is kind of defying those economic conditions in a way. And I know you mentioned the energy efficiency being a factor. Could you go more into that a little bit and also talk about the other factors why people would want this prime sort of city centre lifestyle?
Yeah, I mean, I think that obviously cost of living has been sort of splashed across the headlines. Well, it still is now, but certainly in the second half of last year. And I think there are some real challenges in terms of the rate of growth of things like food and energy. And part of the report, we analysed EPC, so sort of the energy performance or how energy efficient particular properties are. And if you compare either new or pretty modern stock with existing properties, it's those homes that are far more energy efficient. Historically, when energy costs were lower, it didn't make quite so much of a difference. But now the energy costs between an A rated, which is the best rated property, and a G are really significant. We're talking, in some cases, hundreds of pounds a month in terms of the difference in energy costs. So I think that the demand for good quality, efficient, well-insulated, modern properties is definitely increased, both on the sales side, but also on the letting side too. And obviously these modern city centre apartments fit that really well. So I think that's been a one factor in terms of what's been driving people towards these properties. I think the other side of it is that we've seen a lot of relocation from places like London to cities like Manchester and Birmingham. And those people moving up, they've got used to spending higher budgets outside of Manchester and Birmingham. When they come here, they want high quality, high amenity city centre living. So these prime developments, definitely tick those boxes. So they've got gyms, pools, communal shared areas for residents within these blocks. So we've seen demand for those sort of properties really increase. Also, I think a lot of the things we're talking about here are about potentially tenants staying in rented properties for longer. And I think the realization is actually, if I'm going to be in a rented property for the next 2, 3, 4, 5 years, I want to live somewhere that's really nice. And actually, I want the facilities, I want this to be modern, and I want it to be in a location where I can walk out of my front door, meet my friends for a coffee. And all of these, particularly new city centre developments, really tick a lot of those boxes.
Absolutely. I know in JLL's Home is for Everything report that was sort of published post-pandemic to talk about the change in buyer and rental trends, there was a quote in there that mentioned a move to residents looking for cities with a village feel. And I think, you mentioned Manchester and Birmingham. I think both these cities really offer that and that sense of community. And I particularly think post-pandemic, we've seen a return to supporting smaller businesses rather than these sort of big chains. And I think these cities just offer that so much, don't they? Have a real creative side as well. I think particularly in districts like the Northern Quarter, Ancoats in Manchester, kind of Digbeth in Birmingham, I think we're really seeing a preference and a move back towards these kind of pockets really that offer a real community.
Definitely. I mean, I think that we do quite a lot of work at JLL sort of surveying our potential buyers and our tenants to kind of find out what they want. The results really, what they say is people want to live in a nice place with a sense of community that's got some facilities on their doorstep. But I think one of the real shifts that we've seen, certainly sort of post pandemic, is that people are, hybrid working is here to stay. And actually the trend for hybrid working, which was, already starting, I think people were already starting to do, a day or two from home, has really accelerated. And probably we've moved forward 10 or 15 years in terms of that sort of hybrid working journey in the space of 2 or 3 years.
Yeah.
But what it means, I think, and something certainly when we're talking to developers about what they should build, is it means that people are far more concerned about facilities and where they live, not just where they work. I mean, it used to be that if you were working in an office in the heart of a city 5 days a week, you would probably meet friends near the office for dinner. You would maybe go out after work for drinks. And so a lot of that sort of socializing was done near your place of work. Obviously, a lot of people's places of work, certainly for part of the week, are now their home office. Yeah. And so actually having those facilities on your doorstep is much more important. And actually tenants and buyers are willing to pay a premium to live in that sort of community. I mean, it's not a new thing. If you look at actually successful villages out in rural areas, those ones that are most desirable are ones that have, a pub, a cafe, a post office, a shop, some green space. And so really people are looking to replicate that in urban areas. And so we're seeing that where demand is highest and schemes that are most popular are those ones that are able to offer public outside spaces, private outside spaces, places within the building that people can work that aren't just their kitchen table. As well as when you leave the development that you're living in, there's somewhere across the road that you can go and get a coffee or a sandwich if you don't want to make it at home. And so, I think that for us, that is the model that isn't going to change. And I think that we're certainly having to think more, as developers and people who are renting out properties about that sort of quality of local amenity and community.
Absolutely. And I know you talked then about Londoners as well, who have sort of seen, Manchester and Birmingham and these other regional cities as really attractive options. Because firstly, as you mentioned, compared to what they're used to, this will be much more affordable rent. They'll be very used to having little or no amenity in London. And you can see that with this home working trend as well, for Londoners who might want to keep their job, keep their London wage, who might be, hybrid working, as you said, you can see how it's also a very attractive option for them to now move to one of these cities and commute into London 1 or maybe 2 days a week. And especially when HS2 completes, of course, that will be made a lot easier. And the likes of Manchester and Birmingham will become commuter hotspots overnight.
Yeah, I mean, I think that the hybrid working opens up a number of different options. The fact that you don't have to be somewhere 5 days a week really changes, I guess, where people can live and where they want to live. And so I think, it definitely is a factor. I mean, and also I think the other thing is that we've seen a lot of companies relocating offices outside of outside of London. So actually, I mean, if you look at things like graduate retention rates for Birmingham and Manchester universities, but across our big six, is actually a lot more students are remaining in those cities after they graduate, and part of that is because the quality of employers and the quality of jobs that are available have really improved. So it's sort of this combination of, yes, they can work as a commuter location, but also actually in terms of a place to work now, there's far more options than there were sort of 10, 15 years ago.
Absolutely. I think this kind of north shoring trend that you talk about with, major companies like Goldman Sachs and HSBC are now setting up headquarters in Birmingham instead of the capital. You can obviously see there's a cost efficiency benefit for them as well, but also it feeds into this kind of levelling up agenda. And that's, of course, the plan with HS2 as well, to really connect London with these northern cities. We've seen Manchester go from kind of really a bit of a neglected northern city in the 70s to now being known as the capital of the north. Birmingham is the second city, especially with things like the Commonwealth Games, which I know kind of leave a lasting legacy on a city like Birmingham, indeed as it did with Manchester in 2002. So let's talk a bit more about these cities then, starting with Manchester. So it's such an exciting place to be. Obviously, we're here now. I know you're based in Manchester. What is it that is attracting so many people at the moment, especially, to want to live and work in Manchester?
I mean, I think firstly, there's a real buzz around the city that you notice. I mean, I've lived in Manchester for going on for 13 years now, and the change that I've seen in the city over the past 13 years has been phenomenal. And if you look at some of the stats, if you look at the growth in the Manchester economy, the size of the Manchester economy has grown by more than a third in the last 10 years. So you've seen this real sort of acceleration of activity, which has brought with it new development, which then has been the catalyst for new restaurants, bars, and now we're starting to see things like the Mayfield Park and sort of green spaces in the city. So I think that the sort of evolution of Manchester, particularly as sort of a residential city, has been pretty phenomenal certainly over the last 10, but probably over the last 20 years. So that I think the buzz around the city, which brings in a younger population, but also I think increasingly there's people there's better quality buildings within the city now, larger floor plates. So we're seeing a rising number of people who traditionally would have lived in the city in their 20s and left for the burbs in their 30s and 40s, remaining in the city because there is all that life, there is the culture within the city, and so that's really important. For Birmingham, I think the Commonwealth Games, which you've already mentioned, was a sort of a real catalyst for the city last year, and we've certainly seen demand for any properties that we're putting on the market at JLL in Birmingham have sold really well in 2022. The rental market really strong, second only to Manchester in terms of annual growth, and obviously the promise of HS2. Manchester and Birmingham are pretty well connected already, but actually just shortening that commute, it changes I guess where Birmingham sits on the sort of commuter time map. So it pulls it much closer into London, which obviously attracts a lot of investment into the city. So I think that has been really important for both those cities, and something that we've seen actually across our big six is this desire to be for urban living, and actually you want to attract these sort of affluent young professionals into the city who are going to spend their money there, and that's what we've increasingly been seen happening. Certainly sort of in the last 3 years, but I think it's been a trend for a lot longer than that.
Definitely. I know that 80 out of 100 of the FTSE top 100 companies have a presence in Manchester. Also with the Central Retail Park, which is now going to be a government headquarters for the civil service. I think it's honestly every week that you see a new project, whether it's sort of contributing to the job market or the leisure and entertainment market. I know Factory International is due to open soon. Manchester Museum has just reopened and is attracting a lot of attention as well. I think it really is an exciting place to live. And I think for a lot of people, kind of more of a preferable place to live than London in a lot of ways. Not to kind of bash the capital, because obviously it's incredible, it's an amazing city, but I do think we are seeing a move to kind of seeing people wanting and choosing to live in these other cities as well.
Yeah, oh no, completely. And I think that, also for, I guess, people who are looking to invest, particularly from overseas, I think traditionally there's been more of a familiarity with London. And I work part of my week in London. It's a fantastic city. I love it. But actually, for a lot of those overseas investors, London is a different sort of investment in terms of, if you're looking at things like yield, you get a higher yield outside of the capital. And also, I think that one of the big things we've seen is, a lot of people who are investing in the UK do so because of some kind of familiarity with a particular town or particular location. And the strength of the universities in most of our big six cities, in fact, pretty much all of them, they've all got sort of real world-class universities which see strong demand from overseas. We see a lot of overseas students, and I think that familiarity of a lot of these investors from across the globe have children now who have attended Manchester or Birmingham universities, similar to what we see in London. And so actually seeing the strong demand, often seeing the competition that their children face when they're trying to rent a decent property in the city,
Yep.
Really sort of reassures them, I think, that demand is there for properties that they might be investing in. Because obviously some of those investors will do so at arm's length, never necessarily visiting the city before they make that investment. But I think that familiarity is something that's really important, and something that we've certainly been seeing, as those overseas students have returned, certainly in the last academic year, but also the previous one too.
Okay, so for investors considering their next investment, when inflation and then in turn interest rates do start to come down, what kind of impact can we expect to see on the sales and rental market?
Well, I think 2022 has seen significant increases in inflation. I mean, we were looking at towards the end of the year of sort of north of 11%, which, considering the Bank of England's target is 2%, you can see why we've had sort of this relatively rapid increase in base rates. We are seeing inflation fall back, and our forecast suggests that we have seen the peak in terms of inflation, but I think it will have a longer sort of knock-on effect into interest rates, and particularly what people are paying for their mortgage. So we do think that over the course of the year, mortgages will be more expensive, which will mean that sort of fewer first-time buyers are able to get onto the ladder, which will, I think, fuel increased rental demand. Going forward, we are expecting rates to drop back, but most forecasters are expecting that we'll see rates settle back sort of somewhere around sort of 3.5%. So we're not talking about a return to the sort of slightly abnormal pre-pandemic levels of sort of 0.5% base rates. So, I think we are going to contend with higher rates going forward. We do think that they will settle, which will bring more first-time buyers back to the market. But I think the fundamental undersupply of rental stock is going to continue to support rents going forward. So, our outlook for rents for both the UK and indeed all of our city markets is pretty strong over the next 5 years, with rents probably likely to outperform prices, certainly in the next 1 to 3 years.
Okay, so again, back to Manchester and Birmingham, because they keep coming up, but in the next 5-year growth forecasts, what kind of growth are we expecting to see from these two cities?
So we're looking at growth between sort of 2023 and 2027, growth of around sort of 19% for both cities in terms of sale prices, and similar growth, sort of 19-20% for rents. So for sales, we're expecting the sort of the majority of that growth to come towards the back end of that 5-year period. We do think that probably over the next sort of year to 18 months, with higher interest rates and some difficulties with cost of living, we are going to see sort of either small price falls or lower growth within most UK markets. Cities a little bit better than some of the regional markets, but we are expecting that we will see sort of slower growth, slower levels of activity in the next 18 months before a return to some growth sort of from late 2024 onwards. For lettings, we're expecting sort of the supply and demand imbalance to continue to support rents. So we're expecting growth in all of those 5 years going forward, but probably with growth slightly loaded towards the front end.
Okay, so we've talked about the kind of lack of rental supply, particularly in these city centre markets. But what do our investors look like? Who are we seeing investing at the moment, and in what kind of property?
I think there's probably a few different groups. So one sort of sector of the market that we've seen really grow across the UK, certainly over the last 5 years, but probably if you look over the last 10, is the build to rent market. So this is where you get sort of large scale investors coming in and buying either a significant number of units or sometimes even full blocks, or building full blocks for rental investment. So we've seen a really significant increase across our city markets in the last few years. If you look at investment, actually there was more money invested in 2022 in build to rent outside of London than there was in London. I think 51% outside of the capital in 2022. And out of those, the three big markets were Birmingham, Manchester and Liverpool, where we saw around 900 million spent. So really significant investment in rental stock. But even with that investment, that's not enough to satisfy demand. So we're also seeing a return to sort of the overseas investor across our city centre markets, with new homes being their preferred investment. I think part of this is to do with a lot of the security that they feel about investing in the UK. There's also a bit of a currency play. The pound has been relatively weak against the dollar in particular, and dollar pegged currencies. So some investors are looking potentially at the UK and thinking, I get more for my money because of the currency play at the moment. So we are starting to see an increased investment from overseas. We've seen some domestic investment too, people investing from within the UK. But I think some of the implications of higher interest rates for UK investors have put off some of those sort of new players coming into the market. But generally, we need more because there is this lack of rental stock. But we're seeing, particularly on the build to rent and the overseas investor side, some really strong levels of demand.
Marcus, thank you so much. That's been such a valuable conversation, and one that I'm sure overseas and domestic investors would have found really helpful. So thank you for joining me today.
Thanks so much for having me.
And to everyone watching and listening, thank you so much for tuning in. You can subscribe on your platform of choice. We're on Spotify, Google Podcasts and Apple Podcasts, or you can watch on our YouTube channel.